All right, I'm back in my home studio finally after being gone for 30 days. Let's start right off by looking at the S&P 500. We see that Tesla is getting hammered again. Nvidia is cooling off just a little bit, and Apple appears to be on pause from any kind of an up move. If we swing over to crypto after the big spot ETF approval, we see that Bitcoin's pulling back and we have a red day right now. But Ethereum has been on the move, and that gives us a positive signal for all of the altcoins. It means that Bitcoin dominance is finally coming or nearing an end and may even have already hit its peak and is allowing for Ethereum money to roll out of Bitcoin into Ethereum, which means that the altcoins will be next, which means that there's still some upside left for some of our favorite altcoins. And if you took profits or you got scared in the recent dip, you got out too early because I think there's more room ahead on the alts. This is the Stocks with Josh show. Thank you guys for hitting the like. Thank you for joining me today. I'm going to be going over some news stories over stocks and crypto. I'm going to be talking about 3 ugly charts, and I'm going to highlight what I see right now in the QQQ. This video has been time-stamped for your guys' convenience. All right, starting off in the news, I wanted to talk about Warren's worth. Last year, he began to pile money over into the Japanese stock market, and I highlighted it to you at that time that not only was he doing it, but some other large investment firms were doing it. And breaking news today, Japan's Nike 225 rose 1.5% to end the week at its highest level since February of 1990. And so you know that Warren is looking good again and made some big bucks. I thought that was an interesting news story. And then in other news I found interesting, South Korea crypto stocks sink as the nation bans its Bitcoin spot ETF trading. They were trying to do the same thing there as we're doing here, and the government did not approve it. Caused a lot of pain with some of their Bitcoin stocks. Now, I'm going to tell you guys, it's not that big of a deal because they have access to U.S. markets and the U.S. spot ETF. And so I think we're going to see some money flows, additional money flows coming out of South Korea over into the new spot ETFs here in the U.S. And then regarding the Bitcoin spot ETF news, I thought that this meme picture was humorous. And the headline read, Coinbase, after doing $7 billion in Bitcoin transfers, OTC today. So this is them laid out after a big financial day. So what does that really mean? Well, what it means is that all of the Bitcoin buying was in the past. We talked about it before. They bought heavily in June of last year and then again in December of this year. And all that's going on right now, and the reason why Bitcoin is not going higher right now is because it's more about transferring the Bitcoin that was already purchased before around to the new holding accounts. And so that's one of the reasons why we're not seeing Bitcoin take off. I'll just tell you that I'm personally pleased that we haven't seen a stronger sell-off and that Bitcoin is still up at the levels that it's at. Let me take a quick station break for the Moomoo investment app. Guys, get your 15 free stock and better trade tools this year. If you just want to put some cash in the account and earn a high interest rate of 5.1% on your uninvested cash, you can do that. It's available in the US, Australia, and Canada. So click on the link and check out the offer that's available for you. All right, let's get into 3 ugly charts and the QQQ. I'm going to try to get a lot of stocks covered this week. I'm going to be trying to make videos every day, get back into the swing of it. I want to start off because I've had a lot of requests about Alibaba. People have been asking me, Joshua, what's going on with Alibaba? Now, if you remember, in my past coverage, I've been telling you that Baba was not ready for its breakout moment, and all that it was doing was going back up to test structural support where I expected it to fail and come all the way back down to test its lows. Personally, I do not believe that the Baba downdraft is going to be finished until we get a capitulation volume moment below $70. Now, at that point, it could go as low as 65. There's even room for it to go as low as 63. Don't let that surprise you guys because in the last year and a half, this thing has been $59. And so coming back to this price point with all of the bad news stories that we've had regarding the economy coming out of China should not be a shock to you. This essentially, if we did get a bounce anywhere above $60, this would be a beautiful double bottom and could be signaling that ultimate move up that a lot of us have been waiting for. I've been telling you guys that I was taking puts on the top for a drop down, those have become profitable. But I'm not going to tell you that you should jump into puts right now, because what I really want you guys to see is a chart that I shared with the Discord showing that we are in a bullish descending wedge, which will eventually possibly break to the upside, but it hasn't broken to the upside. There's actually a ton of room down in that wedge before it gets closer to the point in which it might break to the upside. And I would even go as far as to say that if you look at the illustration that I shared in the Discord sometime back, that we may not be out of this wedge until April, May, or June of this year. And so there's still possibly 30, 60, 90 days ahead of us of a bearish trend for Alibaba. In that, I also shared what my game plan is. It's to consistently buy this dip and dollar cost average at these lower range so that when we do get a reversal, I'll have a really nice price to go into that breakout mode. Guys, I wanted you to be aware of that and wanted you to see that timeline for yourselves. Baba's moving slowly right now, which is another indication to me that we're not at the end and we're not at a pivot point, because we don't have that high volume, which is what we would need to be to see some kind of a reversal. And so, guys, I still think we're going under $70 on Alibaba. All right, the next bearish chart, and this is going to be a 2-for-1. For you guys, I'm going to be talking about some EV companies, and I wanted to come back and bring to your attention, since I was talking about one Chinese stock, let me briefly talk to you guys about NIO. I wanted to give you guys an update on my opinion. I know that a number of you who follow me are in NIO, and when I do tell you the truth about the bearish chart, I often get some flack, but I think it's better for me just to let you know what I see. Now, in my last video, I said that we were between the trade range of $7 and $11. Now, $11 would have been a full back test of the 200-day moving average. But let's just pause there for a moment. In some of my recent videos, I've been telling you that some big tech stocks were coming down to their 200-day moving average, and hopefully we wanted to see them bounce there. We saw Apple bounce at its 200-day moving average, and we saw Tesla fail to bounce there, and it got more bearish when it failed to bounce there. Well, NIO's doing the opposite, right? NIO is not coming down to its 200-day moving average. It's trying to go back up to its 200-day moving average because it's beneath that average, which means the bears are in charge of it, right? And so I just want you to keep that into perspective. Now, it got up to $9.57 and it failed there. And so that shows a lot more weakness than even I was expecting, and I wasn't bullish on the stock. So what does this mean? It means that it's likely going to test the bottom of the range again, which is $7. And now here's the other concern I wanted to bring to your attention. I've told this to you guys before, that when a price comes up against a support or resistance and it touches it multiple times and doesn't have a strong reaction away from it, that means that it's likely going to break through that level, right? And so now we've touched the $7 range 3 times in recent days, and here we are looking like we're coming at it again, which means that if we do close beneath that, guys, I've told you before, NIO is a $5 stock. I just want you to be aware of that possibility. Now, it's not a strong prediction because I don't know if it'll bounce for the 4th time and go higher or whether it'll break through. But I will tell you that if it breaks through and closes on the day, I personally am just going to count it as a $5 stock. That's what I see in NIO. All right, the last one is Tesla, and I covered Tesla in my last video, and you know what? It's just important right now because it's one of the big tech players. We are on our way to earnings at the end of this month. It's had a terrible run. It's getting extremely near the bottom level of its support. I do think that it's likely to touch it. Now, nobody knows. This thing could reverse today. The other day when we were looking at it, we were wanting to see if it would bounce off of its 200-day moving average and close the day back above it. It didn't. That's bearish. And so now we're looking for structural swing low support, which I see as between $214 and the $208 range. But I want to be specific. I didn't get motivated to buy any because it was just showing weakness. I had looked and considered buying some at $225, pulled back from that. Now I'm watching. I will likely not add to my long-term shares until I can build some confidence off of some positive price action. For me, that would be for it to move beneath 214, find some support, maybe as low as 208. It may not get there, but it'll be the move back above 214 and a close on the day that would cause me to gain some interest in seeing a reversal moment and adding to my long-term position. Those are my thoughts on Tesla. I will leave you guys with this thought on Tesla overall. It's got a ton of mixed signals. I could literally go through 4 or 5 chart patterns that I see in it. If you take a really long time frame, it looks like we've got a series of 2 head and shoulder patterns that we're currently playing out the second bearish head and shoulders pattern. But if we zoom in a little bit and look more locally over the last couple months, we could see an inverse head and shoulders pattern or even a flag pattern that could break to the upside. Having looked at all those charts, I decided it did not make any sense in me going through them. It might create more confusion. I'll simply leave you with this thought. And this is the biggest trouble that I see in the Tesla chart. And that's that in 2023, when all the rest of big tech came up and made a new high from its previous 52-week high, Tesla is one of the companies that failed to do that. And that's a huge concern. And the longer that we get away from that 52-week high, then the less likely it is that it'll make it. Now, I'm not bearish on Tesla in that way. I'm just identifying the Tesla chart concern. I would say that between now and this coming earnings, we need to get above $315. Otherwise, we've got to take a big step back and look at the chart from a different perspective, because we would be running on a 2-year window where we failed to make a new 52-week high. That's a huge concern for any stock, and you can't just love a company to death. You've got to acknowledge what's happening in the charts. And so I think this earnings is going to be like a D-Day, and we're going to see potentially, if this company is going to remain bullish, and I don't see why it wouldn't, because it's got so many good things going on for it. In particular, if we do get a lower interest rate environment, it's going to do very well for housing and very well for auto sales. They already had a great 2023, and so I think they'll have a better 2024. And so I see a ton of reasons why we could, in a short amount of time, make that big move up to 315. I'm watching for some kind of reversal story here soon. I'd love to hear from you guys. If you're bearish or bullish on Tesla, if you're holding out hope for NIO, and if you're accumulating any BABA, I'd love to get an update from you guys. Let me end with some thoughts on the QQQ. Here's another interesting story. QQQ doing the opposite of Tesla. It's up against the top. And so it's a dangerous spot because it's in sort of a strange zone where we're either going to break out above $415 and we're going to go all the way up to $435, a incredible move up, or we're going to break beneath 411 and we're going to have to test back on the lows before we can find the momentum to go higher in this market. And so really it's a 50-50 coin toss as to whether it's going to be a bull or bear trap. So take caution. The chart is not clear right now. We're waiting for it to make one of those two moves. A 2-day close confirmation above 415 to let us know that we could go up to 435, or a 2-day close confirmation below 411. And what we also could use, if we didn't get those 2-day closes or even just 1 day, we could possibly jump in early if we had a high volume day down or a high volume day up, an engulfing candle. That's what we'd be looking for, guys. But wait for confirmation. Don't get trapped. Thanks for joining me today. I appreciate all of you guys. Hit that like, hit the subscribe if you want to get these types of videos for stocks and crypto. Appreciate you. Peace and blessings. Take care.